What's going on, you guys? Welcome to Risky Ryan Trades. Today we are talking about the e-commerce giant Shopify and why I believe it is one of the best opportunities in the market today. It was a great opportunity in the market yesterday and last year and the year before as well, and it will continue to be a buy for years to come. So let's dig into why I think that is the case. Number one, EPS growth. We had a blip in 2022, which caused the stock to drop 80%, which has scared off many investors, but I think it is safe to jump back in because let's take a look at this. We're going to be doubling in 4 years. We're going to be doubling the EPS. 2028, we got a 2.67 per share. Revenue growth. It's a freight train. I'm going to skip ahead. It's an absolute freight train. This is their revenue growth by subscription and merchant. Absolutely massive. They're also growing internationally more and more every year as well. Operating margin had a blip in 2023 and 2022. So it looks a little inconsistent to me, but we had 1,000% change from 23 to 24, which is great. So if this becomes a trend, if they can get their margins up to 24% or something like that, wow. That would, watch the stock pop after that. Cash flow. Their cash flow took a big hit in 2020 and 2021, came back in 2022. This is from investing activities that I'm looking at. But it's been slowly going down, and actually in Q1 of 2025, they reported a loss primarily because of cash from investing activities. So that's something to keep an eye on. It's probably the one, Achilles heel maybe in the near term for this stock. Income statement. So you can see 2022 took a big hit in pre-tax and net income, but it recovered in 23 back into the positive just by a little bit. And the operating income actually made an all-time high in 2024. And so we're hoping to see this trend continue. All right, let's take a look at the charts. So first of all, let's take this off. Most people are going to be scared to invest in this thing because of this 86% drop or so. But if you take a look here, you can see that this was unsustainable. It was growing at, actually, I measured this earlier. It was growing at 100% per year clip. That's just, you can't do that forever. And so it needed to find a new growth trajectory, found a new Gann angle, and this is the 45-degree Gann, and I think that it's going to hold this Gann angle for many years to come. This one went on for 6 years. I think this one can go on for 8 to 10 years, maybe more. And this one, I measured it earlier, it's growing at a 50% per year CAGR. 50% per year. And I like where it's at right now because it's creating, if we go to a weekly, it's preparing itself for a flat top breakout. Once we can get above the 114 level and make some progress, we're going to zoom up to this 176 really fast. And from here, that is a 66% jump. Now, are we going to go up there in a straight line? No. We could potentially, crash down to, 20% tomorrow and return to our Gann angle. Absolutely. But it would recover, I believe. I believe it's going to hold this Gann angle for the long term. So we could be looking at, 29 weeks and we're flat. But then 52 weeks, my worst case scenario is we're up 19.7% from here in a year. Actually 20% in a year. That's better than the NASDAQ, on average anyways. And then after that, if you go to 108, so 2 years from now, 88% higher, nearly $200 a share. That's where I think we'll be at a minimum in 2 years. An excellent risk reward, considering how their income statement is really strong, their balance sheet is really strong, they're in a really healthy place. And the rate of growth to just how resilient they are, I don't think we're going to see like an 80% drawdown like that ever again. I think that the only reason why we got something like that was because it was growing 100%, 100%, 100%, 100%. You know what I mean? Like really, it only took you back a year or two, and it only took another year or two to get back, almost all the gains. We're almost to the all-time highs, and that's another reason why I like this stock. We haven't broken the all-time highs. There's so many other stocks out there that are well beyond the all-time highs from 2021. This one's still trying to reclaim it, and I think it's just going to be a steady grower. So some key levels to watch. 176 was the all-time high. You got 238. That's the new GAN level, flat level that I think it's going to try to build itself to. And then you get into the extended Fibonacci's of 304, 404. And if you're just trying to do a swing trade, $600 is what I would be looking at. And I mean, this is, a little bit more than a swing trade, but I think at a minimum, we're going to get there. Let me go on to the monthly because I don't know how many months is 256 weeks. You know what I mean? Where do I think we'll land here? At a minimum, I think we get there in 5 years. So this is like a medium to long-term hold where you can make really outsized gains, in my opinion. And I think we could get to this $600 level a lot earlier, and probably will get there a lot earlier than 5 years from now. It could be only 3 to 4 years from now, especially if those estimates come true. So I hope you liked this video. If you did, please hit the like button. It helps a lot. If you have a stock that you want me to cover, a crypto that you want me to cover, take a look at, comment it below. And if you've been enjoying these videos, go ahead and hit subscribe. I've been trying to put these out a little bit more. But with that being said, thank you so much. Risky Ryan, out.